afternoon, everyone. It's another chance to talk to you and move into some more concepts that I'd like to kind of think through with you and explain. So, what I do when I'm investing, I look to create different portfolios, and those portfolios have various time frames and various risk profiles. But I generally focus on key thematics. What are the thematics of the day? So as an example, I thought today I'd just highlight a thematic which I've been focused on and I know a bit about and branches off into other areas. And that is the thematic of the energy transition. Now, I don't know how much and to what extent the average person understands and the change that's ongoing and the opportunities that brings up. But believe me, they're big. Let's take an example. I mean, there are a number of independent reports out there, but I'm going to refer to one particular report. It's called the Energy Transition Outlook. It's published by DNV. It's online, available, everybody to look at. And here are some interesting statistics. So, kind of between now and let's say 2050, we're expecting to have globally power systems run by renewable energy to be in excess of 83% something, and that's compared to power systems now which are principally based on thermal or other forms of energy, some areas nuclear. Moving to a system that's 83% powered by renewable energy is not just a transition, it's a revolution in the system, and with that brings a lot of changes. Other statistics, for example, of that change, the report expects that 70% of that renewable energy is based upon solar and wind. Again, thematic signals, bear with me. And to back that up, the report estimates that the amount of energy storage, principally based on lithium-ion technology, will increase from 2.8 terawatt hours to something like 30 terawatt hours. Just, that's more than 10 times. It's huge. It's huge. Electrification of transport, so EV car sales, are expected that by 2033, 50% of all vehicles sold will be electric. Again, that's another huge change. And by 2050 also, the entire energy system, 5% will be based hydrogen sources. The overall kind of energy system, not just the power system, now I'm talking the overall energy system, is expected to be majority renewable or zero carbon versus fossil fuels. So a split of 51 non-fossil to 49% fossil, which is it's a massive change compared to what we have now. And yeah, some fun stats going forward. So let's look at those thematics and the trends and the indicators. And what that shows to me is there is a huge investment potential in this energy transition. But the question is, how do we benefit from that? I mean, do we invest in wind turbine manufacturers or solar manufacturers? Do we invest in companies like Tesla or GE or whoever that are involved in these technologies and different parts of the value chain? It's an interesting question. How do we benefit from it? My view is, or what I have done is, I've broken down the value chain, and I have gone right sort of upstream. So drawing from this major thematic of the energy transition, I've looked at In particular, what are the resources, what are the critical resources to make the energy transition happen. And one of the key resources, which I'm sure many of you have heard of and probably have, are lithium-ion based batteries. Now, the battery chemistry is quite complex, and in every battery, it's not just lithium-ion. There are other components as well. But just an example, if we just focus on lithium-ion. Next question: where does lithium-ion come from? Who has lithium-ion? How is it made? How is it extracted? How is it refined? How is it delivered? You get my point. Going further and further, in this case, up the value chain. So we're looking further upstream. So yeah, in summary, I mean, based upon those statistics that I mentioned earlier on, there are various areas in which we can invest and we can develop. I like to focus on the smaller companies that are involved upstream, simply because they're interesting, they're more exciting, and because they're early stage, the potential for growth is phenomenal. It well outweighs anything you would get, you know, if you just track the index in the S&P 500 or FTSE 100 or other index. And I think that's what I'm aiming to do, is to look at well above average returns from some of these more interesting companies, which tend to be in the exploration phase, in development phase. Some are in the more technology refining phase, but each of them have a very, very specific niche. And that is all for today. Okay, bit of a letdown. I've sort of given all this energy transition, thematics, what type of companies, and then I've kind of stayed quiet about at the moment about which companies I'm currently investing in or looking at. What I will do in the next show, I'll stick with this theme. Let's say I'll stick to the energy transition, and within the energy transition, I will continue the theme and the branches around the materials, in particular that are let's say the new fuel for the modern energy transport or EVs in particular, and break that down, go into some particular companies, because I need to explain better how these companies work, how they're valued, what are the risks, and then you make your choice. You make your own choices based on what I've seen. I'm not giving any advice. I am just sharing my experiences, successes and failures, but how I also analyze them. And I'm doing this so you benefit, and you can also make the higher rates of return that I've experienced. I'm going to finish with unplanned. Didn't think of this, thinking of this on the spot, but with a little bit of a rant. You know, there are a lot of and it depends on your investment strategy, and there are a lot of ways of structuring what you want to do. But in essence, I've looked at index investors, and index investors have their own approach and their own justification and their own set of statistics, and it may be the right thing for you. Others are more inclined to, let's say, follow an approach akin to Warren Buffett, who I think is just amazing investor of the day, and I have full respect for him, and that is about a combination of value/growth investing, but homing in on a group of very, very high faith companies that you believe high belief companies, let's refer it to the high confidence companies, where you have done your research, you followed them, and you are happy to invest in them for 20 years. That's one way of doing it. So you can, for example, instead of just index investing, then you can go into the index and hunt out those super high reliable companies according to certain benchmarks and KPIs. And there are some guys who out there who have shows who go through some of this stuff, and I'll mention some of them next time. But they're really good. So as I said, I'm not here to reinvent the wheel. Whoever's been doing these things, I'll give them credit. What I personally am trying to do and have done is to invest in slightly higher risk companies for those what I call very super high returns. So we're talking not just single digit or double digit, multiple double digit returns, and that's where I'm focused, and it's still applying those very specific meters and KPIs and analysis to these companies. And it's more exciting for me. It's more interesting, it's more exciting, understanding different business models, different risk profiles, different stages of the investment cycle, development cycle. And if you get it right, believe me, it's very, very, very lucrative. And with that, thanks for watching again. I'm taking things step by step. New channel. We'll go as we go, and I'll share information as it comes. But eventually, I do hope to add value to the discussion by demonstrating what I'm doing with numbers. But until then, stay safe. Thank you very much. Have a great day.